This video will showcase when the 2025 bull market will begin beyond a reasonable doubt. Well, why should we listen to your theory? We've already heard a dozen of these. This channel opened 90 days before the true altcoin market bottom reached. We short sold into that bottom and then flipped those shorts into longs, catching the maximum discount, multiplying our bankroll, and then riding it to the upside. Looking at one of our very old videos, you can see this exact same falling wedge. This is on the total 3 chart that we were looking at here, and it's now repeated itself a secondary time. Both of these falling wedges are based in monetary policy. This has little to do with technical analysis. People see triangles, they start thinking, oh, it's one of these geometry channels. Forget about that. This is fundamentals in action because the FOMC is hiking rates. We know for a fact, no question about it, the Fed hikes rates, cryptos will crash. The rest of social media, crypto banter, altcoin daily, they're saying it's altcoin season. So we knew we had to do something and start a channel to get the word out on what really works the market. This falling wedge also because the FOMC delayed rate cuts. Well, what do you mean they delayed? Is there some kind of schedule? Absolutely. This is part of Satoshi's design. You see, Satoshi knew something called the global liquidity cycle. This is the past 50 years of central banks off the gold standard. They need to stimulate the economy while protecting their country against inflation. And they do this with their fake money and bonds, working with big investment bankers like BlackRock, the VC types. What they do is they'll sell these guys bonds saying, give us back that fiat money that's causing inflation, that's got the market pumped up, and we'll give you guys 5%. And they do this every 4 years. Satoshi knew that, so when he designed Bitcoin, as the Fed switches from a focus on fighting inflation into now stimulating the economy, creating jobs like they're doing right now, the Fed suddenly takes all that money captured in bonds and floods it into the economy. Bitcoin simultaneously does its halving, restricting its supply, therefore absorbing liquidity like a sponge. There's 2 different ways the Fed can do this. We all think rate cuts off the top of our head. Trump right now focused on trying to get rate cuts to drop. He's working with Saudi Arabia, the Middle East. He's like, you know what we'll do? We'll get the oil prices to go down. We'll get low data to the FOMC like CPI and PCE, and that will force them to bring the rates down. He's looking to change the data that they get. I know what you're thinking. Well, what does that data have anything to do with crypto? It has everything to do with crypto. This is the SUI chart on CPI data showing high inflation. It starts crashing the instant, the moment, the actual minute PCE data came out. It was right here. PCE data comes out and it just rockets right back up from 340 to 490. We can see Solana at 130. AVAX at 25, Render at 5. All of those falling wedges, they're all this exact falling wedge right here. September 18th, the Fed's going to cut rates. Solana, Render, AVAX, everything is going to rocket to the moon. So we'll do 3x leverage and we'll make out like a bandit. And then you get your upside here. Awesome. The FOMC just recently said, well, guess what? We are not going to be, and let's zoom in on this new purple triangle because I want you to see how well it's really starting to align with that shape. This is where things start to get into the deep end. This is when we're about to unlock the secrets of the bull market cycle. You've understood the majority of what we've covered so far. Fasten your seatbelts because it's about to get epic next level. So each one of these falling wedge starts and ends with massive monetary policy change. Back here during the last bull run, suddenly the rates were at 0 and then they changed, hiking rates in November. You can see right here, 0, 0, 0, and then they change in November. This causes a massive switch. They're still doing the final rate cut down here in May. That's when we get the breakout consolidation here. For everyone who was paying attention to the market and FOMC, there was tons of articles going out saying, why hasn't the Fed cut rates? They're late this year. Started the downside. And then here, it's all because the Fed just shifted from 4 rate cuts that they projected in September at the breakout. Now they've changed it to 2. And this consolidation apex, this apex final rate hike, this one first rate cut, and this one is the end of quantitative tightening in June. This is the secondary tool that the FOMC uses to stimulate the bull market. And we can see directly inside their update. This is the federalreserve.gov page. The committee intends to reduce the Federal Reserve security holdings beginning on June 1st. Let's put that into plain English so everybody understands the accounting behind tracing the money that will go directly into pumping our bags, facilitating the bull run. That document was just explaining quantitative tightening. This means that the FOMC is selling bonds, as we can see right here. This is their bond holding going down to BlackRock, taking their cash and giving them bonds in exchange. That's why the rates are so high right now on this chart. The Fed is going to halt quantitative tightening. This will stop siphoning liquidity out of the system. That extra liquidity must be protected against inflation. It can't just sit in a bank account. Therefore, it will flow into risk on assets, the stock market, cryptocurrency. Plus, there's a high probability of quantitative easing after the quantitative tightening halts, where the FOMC goes in reverse and they start buying bonds off of BlackRock, giving them even more cash. So the quantitative tightening means they stop siphoning cash out of the system. This will perk the market up, and it can go one step deeper into quantitative easing, creating a super cycle. The writing is on the wall. This bull market will begin June 1st. This is giving retail traders approximately 100 days to finish packing their final bags. There's an FOMC meeting every 45 days. In between those time frames, there's multiple data drops, PCE, CPI, official documents. For traders that have been studying technical analysis, once you connect it to monetary policy calendar dates, it suddenly takes on an entirely new life, like we showed you with all the falling wedges on the total 3 charts, Render, Solana, AVAX. Right now, we're forming another falling wedge, the apex, June 1st, right on the chart. We go over to our fundamental data. Oh, we connected it to FOMC policy. For the stock market, every other stock trader already is doing this in detail. Connecting central bank action, 2 different sectors of the stock market, 2 different assets. It's basics of investing. The reason why social media and cryptocurrency hasn't caught on, the previous cycle was so bullish, 0 rates, full-blown quantitative easing. Every tool the Fed had, because of lockdown, they held on maximum overdrive. Therefore, traders were able to make loads of money by using bad trading habits. When push comes to shove, there's 100 days left until this bull market starts to kick off. Depending on how successful the new administration, Trump, Elon Musk is with delivering the FOMC bullish data, that will put a new spin on how long the bull market's gonna last, how high it's gonna go, and more importantly, when that peak is going to be. Using more detailed applications combinations of some of the skill sets we've gone over in this video, this channel will sell the top. Meanwhile, the rest of people out there in the crypto land, I honestly wonder what they're thinking. There's people that will sell the top based on how many downloads Crypto.com app has in correlation with Bitcoin dominance and the Ethereum market cap. These nonsensical theories that are fairly clever but are not grounded in reality. This is true investing 101. It's a zero-sum game. So congratulations to all the fools who will miss the top, who will not pack their bags accordingly. This is a once every 4-year opportunity to take it to the man, the central banks, understand the game that they're playing, and come out on top. In order to make a ton of money, you've got to understand how money works inside and out. And that's the number one missing piece from the majority of people's cryptocurrency investing platform. Thus the focus of our VIP, getting everybody up to speed. There's only 100 days left, and then we're going to be recalibrating for when to take profit at the top. Then it's rinse and repeat. There's always benefit in hiring on a staff to assist you in combing through on-chain data, keeping one eye on white papers, keeping one eye on chart, looking for opportunities. But it's very important when you build a staff that you select knowledgeable people who will be able to give you cutting edge information to get you in at the low and out at the top. And that's something that we offer that nobody else can. Thanks for checking out this video, guys. We'll catch you on the next one.